The stock market is a roller coaster of emotions, and right now it's taking a dip. But why? Stock futures point to a gloomy start. As of Thursday night, U.S. stock futures were slightly lower, indicating a potential market downturn. This comes after a dramatic sell-off during the previous session, triggered by concerns over regional banks' lending practices. But here's where it gets controversial. Are these worries justified, or is it a case of market overreaction? A closer look at the numbers. The Dow Jones Industrial Average futures slipped. SP futures and NASDAQ 100 futures both took a hit, falling over 0.3%. In the after-hours trading drama, Interactive Brokers Group and Oracle slipped despite positive news, while drug makers Eli Lilly and Novo Nordisk faced pressure from the president's remarks on drug pricing. And this is the part most people miss, the connection between these seemingly unrelated events. Banking sector jitters. On Wednesday, all major U.S. stock indexes closed in the red, with bank stocks taking a significant dive. The Dow, SP 500, and NASDAQ Composite all ended the day lower. The spotlight was on financial heavyweights and regional banks, with shares tumbling after Zions and Western Alliance revealed bad loans, sparking fears of lax lending practices. The SPDR-SP Regional Banking ETF, KRE, took a hit, and the recent bankruptcies in the auto industry have only added to the sector's woes. Market sentiment and safe havens. The SIBO Volatility Index, Wall Street's fear gauge, spiked on Wednesday, while Treasury yields and the U.S. dollar weakened. In contrast, gold prices soared to new heights, indicating a flight to safety amid market uncertainty. Liz Ann Saunders, a renowned strategist, highlighted the speculative froth in the market, where investors are chasing risky stocks, potentially setting the stage for increased volatility. Global tensions and economic worries. The ongoing U.S. government shutdown, now in its third week, has halted critical economic data releases. Trade tensions, AI-driven market valuations, and the shutdown's impact add to the market's anxiety. Despite these concerns, the SP 500 has shown resilience this week, boosted by strong earnings, while the Dow and NASDAQ Composite have also made gains. After-hours movers and shakers. Novo Nordisk, Interactive Brokers, and CSX Corporation made headlines after Thursday's market close. CSX's strong quarterly results sent its shares soaring, while Interactive Brokers stock fell despite beating earnings expectations. Oracle's shares dipped after revealing its long-term financial outlook, which included ambitious revenue growth targets. And the story doesn't end here. The market's reaction to these developments is a fascinating study in investor behavior. What's your take on the market's reaction to regional bank concerns? Is it a justified response or a temporary blip? Share your thoughts and let's spark a conversation on the intricacies of market sentiment and its impact on the economy.